All right, that's the past. But where are we going in the future? Where are the markets going for the baby boom generation? That's probably the real question that we need to be asking. The fact of the matter is we had this terrible recession and the Fed came along and printed a whole lot of new dollars and injected the system with a whole lot of money we probably borrowed from China. And the result is, well, real estate prices are still down. Gas is going through the roof. The national debt is out of control. And besides that, we still have political strife all over the world. We got natural disasters. And the problem is all these things roil the stock market. They go up and down and up and down. And there's only so much that the government can really do about any of this. And the problem is with this much volatility, where are we going to find ourselves the day we need our money to retire on? When we really have to depend on the outcome of all of this. If it happens at the wrong time, it could well force a change you never anticipated in your retirement and your stockbroker probably never warned you about. All right, so in the midst of the calamity that could be the stock market or might be the next decade, let's take a look at what does it mean to guarantee 7.2% compounded interest each year. Now, I've been in this business a long time, and we've offered these guarantees. Even in the 90s, we were offering them. And quite frankly, it was embarrassing. I got laughed out of seminars in the past because during the 90s, when the markets were making 30% a year, just buying and holding, to go in and say you guaranteed 7.2 was not very sexy. But let's look at going forward what that would actually mean relative to the history we've had more recently in the markets. So here's the S&P 500, and here's the last 11 years. Now, let's take 7.2%, so per the rule of 72. If I take that and I divide it into the number 72, I now know that every 10 years, I'm going to double my money. Now, this is actually taken because it's the minimum guarantee. Do you understand the words that are coming out of my mouth? This is the minimum guarantee for many of our retirement planning products. This is where we get predictability, safety, and yes, flexibility too. And this is the worst that we do. So what would it mean just to get 7.2%? Because don't forget how well the market's been doing lately, even though it's the tag end of that graph. Well, if I take the very same time scale, which is horizontal, and the very same value scale, which is vertical, as that graph, and I lay it out, to be at 7.2% in the next 10 years, the S&P would have to double from 1,300 to 2,600 by 2021. That's completely not the characteristic of that graph. And yet keep in mind that the fact is, this isn't if the market can give it. This is the minimum guaranteed value we're doing on many of our retirement products. And the fact of the matter is, if that's a minimum, you might do better. So if that's the case, what would happen in 20 years? Well, again, here's the S&P 500. Here's the scale for the first 10 years of growth. The S&P would have to be at 2,600. But don't forget, if you're doubling 2,600, you have to double the scale and double the figure. You're talking the S&P 500 would have to do 5,200 by February 2031 to get to exactly where we can guarantee it simply by putting 7.2% per year compounded growth together year after year after year. 7.2% should be starting to look a little more interesting than maybe you first thought. Now, the logical question is, how can they do that? How does that all work? How do you go and get 7.2% when no one's offering that kind of guarantee? Well, you know what? It's not really rocket science. And when we show you how it's done, you're probably going to slap your head and say, duh. So it's simpler than you think. But as far as explaining it here and now, you've been very patient sitting through this slideshow, and that's actually just going to have to be the topic of our next slideshow. Or the fact is, I can't stress enough that with all this education and all this information, there is still a place where the rubber meets the road for each and every one of you, and that is our free retirement roadmap service. The retirement roadmap is a personalized plan. It costs you nothing. There's no obligation. And we will show you how these guaranteed, predictable, safe concepts can actually make a retirement for you that you can count on. And let me say right up front what the guarantees are. One, as you've just seen, we're going to guarantee that you're going to double the asset base based between 7 and 8% guarantees year after year for the next 10 to 20 years, as long as that money is sitting waiting to be used. Now, there's a second guarantee that you'll learn about on the retirement roadmap. We'll show you how it fits in. And that is, what if you live a long life, you begin to spend those assets down, and the fact of the matter is your accumulation account has gone to zero. You've lived so long, you've spent all the assets. Well, the second guarantee that we haven't even gone into in this presentation is we're going to guarantee that if your accumulation account goes to zero and you've lived a long life, we're going to continue to make those income payments to you for the rest of you and your spouse's life, whether or not there's money left in the account. This is a real pension. This is how pensions used to be. And some of the wealthiest corporate executives in this country run their pensions just this way. Why would H. Lee Scott, a senior executive at Walmart, keep $47 million in an account that just grows 6.6% per year? What is it that he knows that the average investor doesn't know that's trying to save for retirement? Both of those guarantees build our retirement roadmap. Now, the next question is, how is that a fit for you, and how is that going to work into your planning? We're going to illustrate that for you. And all you need to do right now is just fill out the form below and let us know a couple times that we can reach you. And one of the Straight Talk Wealth advisors will call you back. They'll ask you 6 basic questions just to get a snapshot of what your situation is. And then we're going to compile the report. We're going to put it together, and we're going to go over it with you for no charge, no obligation. You don't have to work with us, but you're going to get exact, precise numbers on what this pension guaranteed concept would look like for you and what it would deliver to your retirement. Guaranteed. And I think your stockbrokers are not allowed to use that word, by the way.